Hi guys, the Tattoo Business Doc, Dr. Justin Buerta, and welcome back. As always, everything's on our Facebook profile and our website. So guys, to bring it all together in the third episode on Islamic banking and finance, I'm just going to kind of sum everything up so that you know the fundamental differences between Islamic and conventional banking is that conventional banking treats money as a commodity to be lent and borrowed with interest, whereas Islamic banking requires all financial transactions to be backed by real assets and strictly prohibits the charging and paying of interest. So let's look at the characteristics of each. Islamic banking, excuse me, and conventional banking. Sorry for that, it's that time of the year. The guiding principle in Islamic banking is Sharia laws, guided by the Quran and the teachings of the Prophet Muhammad, peace be upon him, Islamic ethics and moral laws. Conventional banking puts, profit as a motive, but it's more in terms of interest that's being charged and compounded. And there's no adherence to any religion or ethical behaviors. The Bible does not inform banks. Then the next is ethics of financing. Now, if we look at asset-backed financing in Islamic banking, it is focused on producing profits and not interest. Thus, there is a reduction in the debt burden for the Islamic people. Now, in conventional banking, it's interest-based and with increased debt burdens and waste of financial resources. Liquidation of assets in Islamic banking, investment account holder has the same rights as shareholders, but their investment is more secure because they carry the risk for their investment. If the company goes belly up, they lose their investment. That is the reality. When a person looks at conventional banking, there's the deposit holders due to the central bank's requirement is paid before shareholders. That's the thing. Is if you go to a bank and you have a bank, you've got money in the deposit account or whatever the case might be, 30-day deposit account, all those kind of things. If the bank goes belly up, then you get your money first and the shareholders will get money last. Risk and equity financing involvement. If you look at Islamic banking, risk and profit sharing goes hand in hand. As such, equity finance is entered into for the projects or venture with a long-term outlook of returns via profit sharing. In terms of commercial banks and commercial finance, commercial banks do not generally do equity financing. Conventional banks are risk adverse, as such they don't take risk without guaranteed returns. Thus, interest is charged. Return on capital. Now, in Islamic banking, its productivity, money not invested won't earn any rewards. Investment is needed to earn profits. When contract is concluded, there cannot be any ambiguity again, guys, because in Islamic banking, you get dividends. If you want to look at it in terms of understanding, you get dividends, you get paid back out of profits. Then, in terms of conventional banks, money is held in deposit and interest, and is if used or not, it still earns money. Money earns money, and that in Islamic law is not allowed. Right, qarar or uncertainty. The contracts cannot have uncertainties or any ambiguities. All covenants of the agreement must be transparent and known to all. In conventional banking, you'll find conventional financial markets invest into derivatives, which is seen as a good source of liquidity, but is heavily uncertain. If you invest in the stock market, you don't know if it's going to go up or down. If you invest in government bonds and all those kind of things, and derivatives, you don't know which way it's going to go. If you invest in Forex and all those kind of things, Forex can either go down or up. If you invest in gold, oil, and all those kind of things, there's a lot of uncertainty in the market. And in Islamic finance, they can't really work on uncertainties because that would mean that qarar then comes into play. Then risk sharing, profit and loss being shared. Sharing of risks leads to better investment being made, thus ensuring better returns under Islamic law or Islamic commercial banking and finances, because there they have to make sure that where they put their money into, they will get their money back, because else you're just making bad investments. In conventional banking, there is less risk-taking as interest is earned and guaranteed. The borrower carries all the risks. Zakar, okay, one of the functions of Islamic banks is to collect and distribute zakar, all right? So that's money for the state and all sorts of things, okay? Then in conventional banking, the states and governments are more responsible for tax collections. The SARS and all those kind of things, they collected. Compound interest earning in terms of Islamic law is not allowed, is prohibited. Conventional banks make very use of compound interest to make more money. Trust me, when they tell you they're giving you your account at cheap bank charges, they don't make money out of their bank charges. Obviously, it covers some stuff. But banks make billions out of interest. Compound interest is one of the biggest tools that's come out of America and out of capitalism, is that if you compound interest, money is earning money, money is earning money, money is earning money. There's no productivity that's taking place there. There's nothing. Money is just earning you money. Paper is making paper. Where in Islamic, they don't believe that, because you're not investing into people. You're not investing into your culture. You're not investing into the people on the street. You're not building anything. You're not securing everything in making it a real asset and not just debt. Then development of economics and expertise. If you look at how in Islamic banking stuff, the asset backing and investments made, a great importance is placed on the development of the economy of scale, project appraisals, and systems to evaluate performance and the like. Non-conventional banking, the project appraisals and performance appraisals is based upon affordability shown in financial statements. Conventional banks are not hands-on when it comes to the operations of the borrower, where the Islamic banks are a lot more hands-on. If they see something's wrong, they come to your aid and they ask, what's going on? How can we help? Conventional banks, they just say, okay, no, we can just go to your overdraft facility to put it on a reduction basis, whatever the case. Viability versus creditworthiness. Since Islamic banks invest for equity, they look at the viability and the sustainability of projects and enterprises. Very important. That's very important for them. Conventional banks rely on how creditworthy you are. The more debt you have, the more debt they will give you. Because you being compounded by debt, they're making more money out of you with interest. And that under Islam is not allowed. Relationships. Islamic banks become partners in enterprises they invest in. They truly become a partner and they help. And they employ so many people, so many big brains that try and help them. That which they don't know. And they've got to deal with the Western world. They've got to deal with the Europeans. They've got to deal with all of this. They've got to deal with capitalism. They've got to deal with Marxism. They've got to deal with all sorts. They've got to deal with communist countries, which is totally against their religion. But they can't just be this small little bubble in the world. They also can't be. So they actually then try and invest so much knowledge in your business so that you do good. Where conventional banks, man, you're a plain debtor and creditor kind of scenario. They don't give a company. They're not going to come out and help you. Capital guarantee, there's no such thing under Muslim law. Means the capital you put in, you're not guaranteed to get it back and you accept it. And then conventional banking, kind of, you're going to want to get your capital back. You're going to auction off whatever you can to get your capital back. Deposit insurance. Now, deposit insurance is what you do with your central banks. And there's Islamic banking and finance, there is no such guarantee required. But under conventional banking, the central banks, which is an integral part of conventional banking, they require capital guarantees, which is in place. So a person can understand how, if you just look at those little few things, how there's a vast difference between the two, but it's all based on the risk and rewards, the economy on scale, all those kind of things. And they really look at everything, you have to look at, when you look at Islamic banking, Islamic finances, everything else, I mean, the operational transactional costs, they use maraba. As example, one would find that there might be multi-tier transactions taking place, which would increase operational transactional costs. The Islamic bank must buy the car on behalf of their customer, then sell it onto the customer with profit included. So all those costs is taken into consideration before the contract with you as the final person is negotiated, because that's the cost. We add our profit. That's what you pay us over a period of time. Now, Islamic financial institutions is required by Sharia law to fund an independent Sharia supervisory board. This then entails increased internal audits and ensure compliance with Sharia. So you got to understand, each and every transaction they do will be audited to make sure that it is in compliance with Sharia. right? Big businesses, you always have a council within your business or a Sharia supervisory board, which if you look at our Western world, that would be your corporate governance or your governance board. Your non-executive directors, they normally form part of the corporate governance. No, it's the same thing, but those guys are just looking that you're complying with the Quran and the teaching of the Prophet Muhammad, peace be upon him. So that is where they are. You understand? They look at, are you actually legit in terms of your moral obligations and everything you do? Um, so liquidity management. Um, yeah, liquidity management, they manage the liquidity heavily well because it's asset based. They take a share of your company as such, and they make sure that when they do their investment, they're doing it in a correct asset which will return profits. So it's a lot of other things that goes in that. But they've always got to be transparent, and they've also always got to be open and understand the scale of the operations. So that's why they're getting into your business, involved in your business, because there's certain things that if they invest wrong, they're going to lose big, and so because they don't have any capital guarantees, and in that, it's nice to have someone that gives you the money, but they're also part of the process. They're part of understanding your business. They're part of understanding where you want to go with your business. And they will invest in that. And if they see, okay, now you're struggling, they will come in and say, but how can we help? And not let's close you down. And let's put more debt on you. Let's just fix your problems with more debt. If they're going to see, okay, well, there is no other avenue but to rather just close the business, you're not going to lose everything. All that happens is the business will close, they lose their capital investment, and you lose your business. And you probably lose a lot of credibility at the same time. But even in Islamic laws and the way the Quran is written, you can't hold that person accountable because if it happened because that person's unethical or he made bad business decisions, he's going to answer for it to Allah. Because Allah is the ultimate owner and creator and everything else. So that person will have to answer to Allah at the end of the day, and that I must admit is this massive sword over a lot of Islamic people, because they fear having to be judged by Allah. They fear being wrong. They fear not being moral. They fear being unethical. They fear exploitation. They fear it. It's a living fear for them, and that puts a worlds apart from conventional banking and business. As always, guys, got your back, and I'll see you next session. Have a good evening.